Hey everyone, Diggy here from ForexHabits.com, and today is a very special day because it is 10/11/12, the 10th of November 2012. Now, it is a Saturday, and once again the favorite time of the week for me to do my analysis. So, let's have a look at Euro US dollar to start with. This is a daily chart. The indicators are the MACD histogram, the RSI, the slow stochastics, and exponential moving averages, the 21, the 50, and the 100. Now this is a daily chart, and we have come back significantly from the 131 high to 127 already. So at the moment everything is still looking negative. The price action is below all three of the averages. The MACD histogram is negative, the RSI is under the 50 line, which is negative, and the stochastics are negative. So this is all pointing for more to the downside. Now what we could potentially get is a 50% retrace of this whole move up from 120 to 131, which would put that somewhere at around 125. Let's just put a Fibonacci on there quickly to see if that would be a potential. So we can see the 50 level is at around 126, which we will definitely head towards. But potentially the question is this going to just break down and come down below these lows? So let's remove this Fibonacci level and let's change this to a weekly chart quickly, just to have a look at what is going on in the weekly chart. We can see the stochastics have crossed and are pointing to the downside. The RSI is under the 50 level, which is negative. And once again, even on the weekly chart, the price action is below all three averages, which is quite a bad sign for the downside. Now, the MACD histogram has not crossed over to the downside just yet. Should this price action continue to head lower, the MACD histogram will cross over to the downside in the next week or two, I expect. So I expect for the Euro US dollar, we are going to head lower, minimum to 126. But quite likely to about 124, and at that level we'll see again what the situation is. Now, as for an entry point, I would say we will pull back up to this 21 weekly average, so we should go short at 127.70 with a stop just above 128.30. I would put that at. I'll put that in the comments below, don't worry about that. Now let's head over to the Euro Japanese Yen, which we're going to start with a daily chart first and just do the analysis. So, same indicators, same situation. MACD histogram is negative, RSI is under 50 is negative, stochastics are pointing down as negative, and price action is under both the 21 and the 50, but it has just stopped on the 100 exponential moving average for the daily chart. Now, what has also happened is this trend line has been broken, which it has been above since July 2012, since the 94 low. So that has been quite a significant trend, and that has been broken. Now, if we change this to the weekly chart, we can see what's happening here. The MACD histogram is still above zero. The RSI is below. It's just on 50, so it's totally neutral. The RSI, the slow stochastics, has crossed and looking like it's pointing to the downside. So after such a big weekly candle, we can actually expect further downside once again, just like the Euro US dollar. So I expect the Euro Japanese Yen to go to 98 or so. But because it has closed on the 21 exponential moving average, on the weekly chart we can expect a pullback, and we can expect back up to about 102. It is now 101. So I would go short on this Euro Japanese Yen in the next week at 101.80 with a stop above 102.20. Now I'll put that in the comments as well, so don't worry about that. Now, let's have a look at the Standard & Poor's 500 chart, because why not? Now, on the daily chart, the MACD histogram is negative, the RSI is below 50 is negative, and the stochastics are still pointing down. They are below 50, where it's just -2. The price action is below all three moving averages here. And what's interesting is the 21 exponential has crossed down through the 50 exponential, which is usually a negative sign. Let's have a look at what happened here. The last time the 21 crossed through the 50, look over here. This was at about a point of 1326, and the ultimate low was 1261. So that's about another 60 points from this point downwards. So if we look where it crossed at about 1375. So the target should be around 1300, which is what I've been calling. Last week's analysis I also called for 1300. I called this rally and a short, and we're going down, and that was a really good call, and I think we have further downside to go. But let's change it to the weekly chart. Let's have a look here. Now look what's happening here on the weekly chart. We have recently crossed into negative territory with the MACD histogram. The RSI is below 50 and the stochastics are pointing down. So on the weekly chart, this is looking severely bearish, not even to mention the fact that there's a big divergence between the RSI and the price action with this higher high, but actually a slightly lower high at a double top here on the RSI. So my call is minimum 1300, which is about the 1311 is the 100 exponential moving average on weekly. But as you can see, when it dips down towards the 100 exponential average, it usually goes down below it quite a bit. So there's a good chance we're going to head to about 1250 or 1200, possibly even before the end of the year. Now, as for a short position, I'm still holding that short position from last week where we shorted on average at about 1420. We're currently trading at 1378. So if you don't have a position and you're looking to go short the S&P 500, I would short this at about 1390 to 1395 with a stop above 1406. I'll put that in the comments as well, so don't worry about that. One more, let's have a look at the Nasdaq, simply because I like the Nasdaq chart too. It's a nice one. We're going to put that on a daily chart, and we're just going to have a look at what is happening quickly. Once again, price action below averages. Once again, the 21 average has crossed through the 50, but on the Nasdaq, it's actually a bit running ahead because the 21 average has also crossed down through the 100 exponential moving average. Now the RSI is pretty low, but it's still not super oversold, and the stochastics are still there. So what we have here, and we are under a pretty steep descending trend line, and we have also broken this trend line that's been going up, so it's looking very bearish for the indices. We change that to a weekly chart. Once again, we're under the 21 average, we're slightly under the 50 average. The MACD histogram is negative, the RSI is under 50, the stochastics are pointing down. So what's going to happen here? We're easily going to head back to this 100 exponential moving average on weekly, which is around the 2450 level. But once again, when it gets there, it's probably going to base a bit, rally a bit, and then it's probably going to cross down. So we're going to head towards 2200 or 2000, which is about the approximate level where I would put it at. Now again, we are short here from about 2680, I think it was, from last week's call, and we're still holding that. I mean, that is a terrific call, and it's not going to go much further to the upside, I don't believe. So if you're not in this position and you didn't follow last week's call, you can go short in the next week ahead. I think you can short at around 2605 up to 2630 with a stop just above 2640. It shouldn't get much more. 2645, I put the stop above that. I'll put that in the comments, so once again, don't worry about that. So the overall conclusion is indices are going to head a lot lower. Euro US dollar should head lower. Euro Japanese yen should head lower. It might be a little bit of a bounce, but that is slight bounce next week, and that rally should be used to go short if you are not short already. Of course, always trade within the limits of your account. Don't risk more than a few percent of your account on a single trade. Always trade with stop losses. And once again, trading is risky, and if you don't have money to trade with, money that you can afford to lose, do not trade at all. There is an inherent risk in this trading game, but stick with tight money management, stick with proper technical analysis, and in the long run you will come out ahead. But it is so crucial to stick with tight money management and to stick with perfect technical analysis. So be sure to check out the blog at forexhabits.com, subscribe to this YouTube channel for all these analysis, and leave a comment if you like this video. Give it a thumbs up. I would love to hear from you. If you have any problems with trading, you would like personal coaching, you would like one-on-one trading, I'm here for you. Just send me an email, contact@forexhabits.com. Cheers.